Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 9th of January 2020. And earlier today we published a podcast YouTube video entitled Gold and Silver Down and Latest News Discussion with Controversially Greg, where we mention that gold and silver prices have fallen again today, the second such fall in 2 days, and address topical news issues including tensions in the Middle East and the Duke and Duchess of Sussex, aka Harry and Meghan. And we've placed links to this video in the description box below. Now, we also briefly mentioned a Reuters article published today where Mark Carney, the Governor of the Bank of England, has suggested that UK interest rates could be lowered further if the economy does not improve or in fact worsens. So let's take a brief look at that article. Article published by Reuters, 9th of January 2020. Carney says Bank of England could cut interest rates if weakness persists. Bank of England Governor Mark Carney said on Thursday that the central bank could cut interest rates if it looks like weakness in the economy will persist. His comments sent sterling to a near 2-week low against the US dollar as he outlined a debate on the Monetary Policy Committee about whether interest rates needed to be cut now. Last month and in November, 2 of the 9 policymakers on the Bank of England's interest rate setting committee voted to cut interest rates to 0.5% from 0.75%, though Carney himself backed keeping rates on hold. Britain's economy grew at its joint weakest annual rate since 2012, late last year, and many indicators of the economy remain downbeat, despite signs of optimism among businesses and consumers following Prime Minister Boris Johnson's landslide election win last month. While Carney also described reasons for optimism, investors honed in on the comments about a possible rate cut, which he linked directly to the current economic outlook, whereas previously he talked about cuts more as a contingency. Quote, with a relatively limited space to cut bank rate, if evidence builds that the weakness in activity could persist, risk management considerations would favour a relatively prompt response, unquote, Carney said in a speech at a Bank of England event on inflation targeting. Similar language was used in the most recent MPC minutes by Michael Saunders and Jonathan Haskell, who both voted for a rate cut. Combining possible interest rate cuts and the prospect of more asset purchases, Carney said the Bank of England's current armoury was the equivalent of cutting bank rate by 2.5 percentage points. Money markets now price in a roughly 14% chance of a rate cut at the Bank of England's January the 30th meeting, Carney's last before he hands over the reins to the Financial Conduct Authority Chief Executive Andrew Bailey, who takes over on March 16. Markets price in a roughly 50% chance of a rate cut by the middle of the year. Quote, while this shouldn't come as a huge surprise, given that there has been a couple of MPC dissenters calling for lower rates at the past 2 policy meetings, it is the strongest hint yet for a rate cut in the not-too-distant future, unquote, currency strategist David Cheetham of brokerage XTB said. On asset purchases, Carney said there was room to at least double the Bank of England's £60 billion stimulus package of August 2016, a sum that will increase further as more government bonds are issued over time. Carney also gave reasons why the Bank of England might not cut interest rates, citing tentative signs that global growth was stabilising and ongoing tightness in Britain's labour market. He also said there were early indicators that there had been some reduction in business uncertainty since Johnson's sweeping December the 12th election win. The rest of his speech focused on possible changes to the Bank of England's inflation targeting framework, which he said had served Britain well. Carney said raising the inflation target as advocated by some economists as a way to spur growth and escape from years of low interest rates, worked better in theory than in practice. He also pushed back against those who think the Bank of England should use its quantitative easing stimulus to directly fund infrastructure or environmental spending. Quote, "In my view, these should be resisted," unquote, Carney said. "While carefully circumscribed independence is highly effective in delivering price and financial stability, it cannot deliver lasting prosperity, and it cannot address broader societal changes." End of article. Interesting. Sterling has fallen in the past day or so and currently stands at $1.31, having been as high as $1.35 less than a month ago. Now that said, sterling has recovered well from its lows back in August of 2019, when, against the dollar, it stood at $1.20. Also, we have to bear in mind that the dollar itself has also fallen recently against a basket of international currencies, though not hugely. The concern many of our listeners have, of course, is what does this mean for the price of gold and silver? Well, in dollar terms, any strengthening of the US dollar is likely to have a downward influence on gold and silver prices, whereas any weakness in sterling will pose an upward pressure on gold and silver prices if they are bought in sterling. Now, if we take the last week, for example, gold is actually up 1.55% in dollar terms, but up 2.1% in sterling terms. And silver is down 0.58% in dollar terms, but unchanged in sterling terms, thereby showing that the dollar has strengthened against sterling in the past 7 days. Now, this is a consideration we must all take account of, not just the dollar value of gold and silver, but also our own individual currencies against the dollar, as this is reflected in gold and silver prices, and other commodities, as most, if not all of them, are priced in US dollars. Now, our estimate for the United Kingdom is that rates are unlikely to be lowered until at least March, and possibly as late as June. However, that said, much also depends upon what other central banks do in the interim as well. We have countries currently desperate for export growth. Many will attempt to devalue their currencies or reduce interest rates to achieve the same effect in order to make them cheaper to overseas buyers. But this can also backfire too, as it makes imports more expensive at the same time. Now, at the time of producing this podcast video, gold is standing at £1,187, down £1.87 on the day. And silver stands at £13.70, down 12 pence on the day. In dollar terms, gold is $1,551, that's down $6.10, and silver is standing $17.90, down 21 cents on the day. So much for those pumpers telling us to expect $2,000 gold and $23 to $25 silver very soon because of the Middle East situation. Now, equity markets are rising as we predicted, and the Dow is currently up 211 points at 28,956, just shy of 29,000, and we predict very soon 30,000 is on the horizon. Thank you for listening. Please do not forget to tune in to our latest videos, published during the past couple of days. And certainly comment on controversially Greg's interviews, especially today's, even if you disagree with him. And finally, if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.